Once considered the biggest and best stock in the world, Apple is in trouble, and it's gone back relative to the Nasdaq to 2020 prices. So what gives? Well, it turns out volume trades, CTA increasing, and of course, huge moves across the board are starting to become more prevalent in markets, and it's putting pressure on the downside, with bears starting to take control of certain segments. So today we'll talk about Bitcoin, we'll talk about gold's all-time high, and obviously we'll talk about everything to do with markets around the world. Well, welcome back everybody to the Daily Show, where we talk about markets around the world, and boy oh boy do we have some big macro lead indicators and hot charts coming your way today. There is so much ahead of non-farm payrolls this week that you need to be watching. Just a quick reminder, if you want to find out more about markets and start to understand them better, our free weekly newsletter is certainly worthwhile. Some great tips and tricks in it this week. Sign up, free, name, email address, links in the description down below. Let's get started by talking about what's going on from us. What are the retail traders like you and I doing right now, and where are we making our mistakes? Well, as it turns out, everybody has been super short, of course, for a long time on indices, but it's starting to drop off on the S&P 500, going from 80+% a few weeks ago to only 66 now. We've started to see some weakness in those charts as well. Meanwhile, the DAX has gone to super concentration levels of short, and this is usually actually a tipping point in itself. When you get up to the 85 to 90% overall bearishness, that often can be a tip point where it spikes, takes everybody out, and then ends up coming down. But most notably here is gold. Bulls 41%, bears 59%. This is a huge deal, because basically what it means is that we're seeing a squeeze occurring against us, the retail traders. And it turns out in the sentiment survey that we did this week, where we asked whether gold was going to make a new all-time high, you guys were on this. 60% of you saying yes, and 40% of you saying no. So we'll keep doing these polls over on our X account. Make sure to sign up and follow us over there, because I think it's a really good read to see how many smart people like you out there in the community that are sharing your ideas. And it turns out you were right, guys. And many people were no doubt wrong. What about 3-day average call volumes? Well, it turns out that this is a big deal. And of course, we've gone back to where we were back in March and April of 2023. Certainly worthwhile checking on your charts. As we know, gold's been heating up recently. And really where the best segment is actually been gold stocks. The worst ratio to gold price that we've really seen in decades. And this means that gold stocks could be bottoming off as we start to see, of course, the end of the Fed hiking cycle, and according to Jerome Powell, some kind of cut coming at some point. Not as many, though, as the market used to expect. Gold CTAs also have been showing upticks, which is, of course, a positive sign for the breakout. It's one of the reasons we spoke about it being so bullish this week, and so far so good for that trade. Let's move over to CTAs, though, in the markets. Goldman Sachs have come out, obviously giving us another projection, mostly showing us sideways to downward convexity. Overall, it's been pretty much they're negative on the market from the CTA perspective, and we may have just seen a big sign. As you may know, if you've been watching, we've brought this chart up many, many times, and what it shows you is if the CTAs start dumping, then it means usually you're in for a larger return. That is a bigger sell-off across the board. And guess what? Well, we've finally got the first dump here ahead of price. So CTAs have come out and they've dumped price on the S&P 500. I'll get a NASDAQ update very, very soon for all of us, so we can check that out. And you can see here that that dump has not been correlated with the market yet. Now, previous dump over here did get correlated with the market. And obviously over here we saw dumping and the market went down as well. They weren't huge sells because they ended up not following through properly. But of course, with price action, this is our first sign of weakness in a while from the CTA perspective. Let's talk about strength as well in the markets, though, because of course, Chinese stocks have been heating up, and it looks like no fear in the Chinese stocks recently. We've been talking about them really since pretty much the beginning of Feb, and so far they've been doing very, very nicely. JD also coming out with a pretty good earnings report and sending some of the stocks up and around. So quite a nice move there. And again, just showing you that sentiment can change just like that on markets. What about US payrolls? Well, it turns out that we've got the jobs numbers coming on Friday. It's going to be a huge catalyst for so many markets out there. Are we starting to weaken? According to the preliminary results, it looks like it's a little bit of softening, but overall wage growth is accelerating, which is kind of bad for inflation. And you can see here, it seems like changing jobs is how you get a pay rise, guys. So there you go. That's a bit of information there. And I'm sure it's not new to any of you out there that have been working and loyal to your companies for a long time, not getting that recognition. It's kind of frustrating, yeah, that does happen out there. S&P election years, what's going on in March? So March tends to be a bad period. We've talked about this since mid-Feb. Obviously, it hasn't happened yet. But if we do see sell-offs, it can happen around this time. And look, that's again just statistics. If you're not seeing the price action, it's not as good because, of course, you can't really predict it like that. You want to see some signs of weakness coming through on markets. Another reason why bears may be out there right now has to do with, of course, the overarching FOMO or the general calls that are in this market. Just remember, they're nowhere near as high as they were in 2021. I encourage anyone that wasn't trading and you're watching this channel right now in 2021, go back and have a look at the hyper-growth stocks of that period. We have goldfish memories, everyone. We forget about how insane things really were. That was one of the most insane markets I've ever seen. The crypto market around that period, and obviously the hyper-growth stocks were certainly something that I've always learnt from, and you have to expect the unexpected in markets in terms of what's going on. Speaking of unexpected, anyone that said Bitcoin was going to be back and this area of the halving cycle to an all-time high, I would have probably said you're mad, that's not going to happen, but it did it, yeah? So now that we've reached an all-time high and we've seen an over 5% sell-off day, what does that tell us about the data? Well, it generally means that we're going into a sideways action period. Now we've got 1, 2, 3, 4, and 5 reads at all-time highs. So it's not too many, but every single time, so I guess that's a good statistic, we've seen generally a drop-off and a sidewaysing market. Now at the moment, what's happened? It's gone straight back up. Why? Because we have BTFD. The FOMO is real in this market, and obviously everyone wants to get that 15% discount. On average, the returns back were around 20 to 25. So 15 is not bad, but sometimes it can get a little bit worse before it gets better. And speaking of getting better, if you haven't already watched one of our other videos, I have spoken about my thoughts and opinions on crypto and Bitcoin moving forward. I am a big fan of Bitcoin, Ethereum. You ask me about other coins, I don't really know. Yeah, I can look at the charts, but I don't know which one's the best. I tend to think of that as a wild speculation sometimes. But the big thing here is going to be market capitalization size. Remember, it is usual to see this kind of uptick that comes through crypto. It's usual to see weakness for a period of time, and maybe we've front-run that March into April run. Maybe it's still there, I don't know yet. But generally speaking, we will go into a sideways action, and things don't really start to improve until June and July, and then the end of the year in that last quarter that tends to go wild. And that's partly because of the halving cycle. Remember, everyone's hyper on ETFs. Don't get me wrong, alt assets are coming. And if you think about market capitalization size, let's say gold's around 12 trillion, maybe even 13 trillion soon, then we probably can say that it's fair to say that maybe Bitcoin will be worth a third of that based on asset allocation. That's about a 4 trillion valuation. At the moment, it's about 1.35 trillion. So you can kind of get an idea of where it could easily get to in terms of market capitalization size. Rather than just throwing out giant numbers like a million or something, I'd always go with market capitalization size. Tends to be a better one. Now, what happens around halving cycles? Well, we usually rally in, then we sit, then we rally in, then we sometimes drop. So history tells us that we're probably rallying in and we might need to about sit or chill for a little bit here. We'll find out whether that's true. What about the market? Has that got any chill? Well, according to Wayne's study, as we've said, we're still more than likely, even if we get a reversal here in markets, going into a bullish period. So investors probably don't need to be too worried yet, as whatever's out there so far doesn't seem to be a big problem. 25-0 is the record. That's a very strong record with some great data behind it, showing you that generally speaking, the trend has been up. So where are the opportunities in markets? Well, we have started to see a bit of a spike up in treasuries again. We do have a great 6 to 18 month target on treasuries where we're looking for that to really spike up. And it may have formed a base based on all the large transactions that have gone through. Yields might be dropping as well, and we'll talk about that soon. Qs, what's going on there? Huge sell on Qs the other day. I'm going to assume it's a sell because they're at the highs. And also my favorite Microsoft stock, somebody came out and got rid of some. So what's that usually done? A little bit of down, mostly sideways. So it just could mean that we're in a bit of a down, bit of a sideways style market, at least based on those volumes. Do you remember Broadcom and Costco are still coming? DocuSign as well is coming. You know, they're still earnings season, although the biggest ones are out of the way. But let's talk options for a moment, because if you were someone that bought the 50-50, you went BTFD, guys, and you took it all the way to the gap fill, I would have thought that was very good. Now, the gap fill was about 51.28-ish, and of course, there was a HVL level at 51.20, which is a big zone in options for the day. So zero DTEs remain a very important part. We'll be adding them to the show as well. so you guys can see why the next levels are based on 0 DTEs. But effectively, the HVL level was a good level to short. If you shorted around 51.20, not bad, guys. That gap fill short does seem to be cool. And do remember, we've got another large gap down in here, and 50-50 remains the huge turn point from a price action-based standpoint. I think it's 49.80 that has a big gap on it as well, the market could be going for. For Thursday, this is your news ahead. Pause it here if you're interested. Friday, including non-farm payrolls. And do remember that Jerome Powell's on Thursday. Friday is the payrolls number. And with payrolls, it often goes off in one direction, then reverses to the other direction. This is because payrolls is a complex number and Wall Street loves to have some fun with us. So we've been talking about lots of different sectors and opportunities. Now, I've obviously been crapping on about utilities, and utilities was up 1% over the last 24 hours. And you might say, well, Tom, that's crap. I could have just been in semiconductors. Are you an idiot? I would say it's all about risk reward, guys. Ratio trading is very important. Do you have to have a bigger stop loss on a utilities trade as you do on a semiconductors trade? Absolutely not. So remember, when you're using the power of risk reward, a certain level of risk across the board, you tend to do better. If you're someone that just positions in and goes all in, let's go, buy the dip, well, of course, semiconductors would have been better for you. Gold remains a standout though, which we've been talking about as well. And semi rebounced, which is an interesting one. Overall, last 5 days now, gold the best returner, utilities only with 1.77. But it has shown, again, signs of showing some rotation here. So when we get defensive rotation, we need to be paying attention. What about options? I got to say, there's a massive options market. All of the next year and two, I think options is just going to keep growing and growing and growing as retail traders and everybody else moves into it. 46 million versus 41.5. The average has gone up 2 or something like that in terms of overall options activity. 57% calls and 29% of retail traders in the single legs. So a lot of stuff happening in these markets at this stage. And you can see here that there were some big moves, most notably things like CrowdStrike. Now, I had a lot of people asking me questions about this. I love CrowdStrike. I think it's one of the best cybersecurity stocks. I've always been in love with that stock for a long time now. That cloud net, and of course, Microsoft and even PanW is something that people have been looking at. But this one here opened up at 20-something% on the day. I was super negative on that open. And the reason why is because the other day it sold off big time. And that usually means somebody was trying to dump their positions. Now, the earnings was obviously good, but it was a warning sign for that stock. Another one that did that recently was, of course, SMCI. So far, that has returned back, though, on hype. So it's back above. Few people making fun of me about this one. I'm still going to stick with the idea that I think it'll weaken over the next coming months. We'll find out though, because it is, of course, over $150-ish. So yeah, 150, I think, over the top of where I thought it might start to weaken off. We'll keep testing it. Obviously, it's a great one for us to follow. Do remember Tesla and Nvidia as well, starting to show some massive options moves. And overall, there's tons and tons of puts and calls going through this market with a lot of people confused each way. When do we want to be confused? When do we not? We've got the VVIX up here, and the volatility of the volatility has started to spike. But do remember the VIX 16 level. We've talked about this before. If we get above 16, it will change everything as people will start hedging their short VIX positions. Now, that hasn't happened yet. We've never been above 16 and held it. Wait for that zone. That's probably going to correlate with mean reversion. Another thing we're looking for is weakness across the yields in everything to do with bonds. We haven't got that yet. This read here, not going above the high. However, it did spike back up, showing that there's weakness potentially behind the doors in the market. Overall, central bank liquidity remains just completely even, which is neither here nor there. And yields are going to come into focus over the next 2 sessions. 4.5 on the bottom end, starting to break down. 4.75 breaking up. Now, the thing with yields is that you would think, okay, it breaks down, market's going to go up, isn't it, Tom? I don't think so. I think that the thing is that we've moved to a market where its strength has been the key. So when you think about it, everyone's been saying the economy's strong, we've got good earnings, everything's great. What if we start to see weakness in the jobs numbers? Well, all of a sudden that means weakness in the markets. Yes, yields will go down, but the whole premise of why the markets have been up recently, remember they've been bucking the trend and disconnecting from yields. I don't know. What do you think in the comments? That's a very interesting one, though I'm not going to take much from yields either way. Transportation's sideways, down a little bit, nothing much there. Home builders not down very much, so obviously no signs there. Bond indicator still coiling across the board, no new low. If it did make a new low, watch out down below, guys. High yield junk as well, something that you want to be watching on your charts as that's been coiling. So of course, I think non-farms could be a catalyst here for markets. Let's move over to the dollar index. Now, it weakened and it front-runned what you can only assume is the non-farm payrolls. It started to weaken off, but there's no new low yet, although it did go through that 103.50. Now, this has been exceptionally good for those euro traders, and you saw I had the euro on the charts because I've been loving this one. I kind of front-runned it a little bit because price action did it. It wasn't my opinion. It wasn't your opinion. It wasn't anyone's opinion here. We saw it break through the trend, and you had to go with the bullish end. I mean, that's what it was. Even though you're going against some big news and everything else, this is why sometimes you have to react to what the market's doing. It's not really a prediction because the market already told us it wanted to go bullish. And so far, so good. It looks like the swing is on big time here. And it may be just the beginning of a huge move for the euro and weakness in the dollar finally coming through. And if you had to ask me what I think about the dollar over the next 12 to 18 months, I think it's going to go weak. I mean, we'll see. Let's talk about gold here. And gold, new all-time high, thanks to the dollar weakness, it's helped it a bit. And it's been a pretty good little trade. And to put it in perspective, you know, we've got this huge movement and we've obviously got what we call the cup and handle pattern that a lot of people love so much. We've got flag patterns. You got every pattern you can think of towards strength. Generally speaking, you know, I'm pretty bullish on gold. Obviously, a new all-time high is going to make everyone now talk about it. What was unique this week was we were loving gold, yet everyone else wasn't talking about it. Now I'd have to assume it's on newspapers and everyone's talking about all-time highs. Still could be more to come, and I am positive on it over the next 6 to 18 months with gold generally moving up. However, I think there's going to be some shenanigans. What you don't want is what we saw last time, which it rallies up and then dumps huge. That usually means sideways action. And remember, we've said that on the Bitcoin side as well, so we'll find out whether that's true. But you can see it's a time and time again. Replication is the key to markets. Let's move over to oil. It needs to do something. 84 on Brent, too much for it again. This level is massive. So Brent waiting probably for non-farm payrolls. You can see here US oil, we spoke about literally where the bulls had to hold it. If you did get into that trade on the previous session, wow, it was really nice. However, this 80 is just annoying. So hopefully you clipped a bit there if you were in it. But overall, until we get above that 80 level and break and close above, we just can't see the 82.50, 84.50. It continues to struggle. It really needs to move oil if it's going to hold up. USO versus SPY still trapped, as we can see there. And Tesla is moving down. So we have had some pretty big options activity on it. Most people are now turning bearish and putting puts all over it. So maybe it's starting to get near those lows. But 164, possible return point, did take a low, bounced a little bit, down 2.32. I think it's coming back here. A few of you in the comments section, old-time viewers, lolling at me about the 147 level. Yeah, that was a zone that I called many, many times over here. And obviously we had to reverse on that eventually. But look, 164 seems probable for Tesla. And at this stage, it's only weakness on this chart after taking the lower low the other day. Things can switch very, very quickly. Nvidia keeps going up. I would have thought this one would have kind of been more consolidatory like through this zone. But look, you guys, no one can be stopped on the semiconductors market. It's the one market where you traditionally don't want to go against it just because it's so aggressive. And I've said that a lot of times before. I wouldn't have blamed anyone, though, for having a go with some options, not anything else, with options around this level, although the IV percentile was too high, similar to SMCI, which is a bit of an issue. Anyway, 887, could it be going to 1,000? Absolutely. Is it disconnected from some reality? It's a great stock that's making a lot of money. Meanwhile, Apple is not such a great stock, coming down to the first DCA level for a lot of people, which is that 168, 169 zone. So Apple has been significantly underperforming. So at the start of today's video, I had this on my charts, which was AAPL versus the Qs. Now, what that's doing is it's showing you here that Apple has been materially underperforming the Qs for quite some time. And actually 2020 in July, it is equal to the Q in terms of ratio. So that just shows you how bad really Apple is doing in this market. It is horrible. And actually it looks like a very nice style, either head and shoulders or even partial Wyckoff up here when you're looking at weakness. But it's been dropping off a cliff in comparison to the Qs. And if it doesn't hold this zone, it breaks below, a lot of you are going to be saying, Tom, we've got a monthly, weekly double top. It's predicting a 130 level. Now, if that's happening for Apple, could this be a beautiful zone? Absolutely. I think for long-term investors, you're going to be salivating over that. But there's just a lot of fails in Apple at the moment. I've been saying it for years. Where are the new products? And you might say, well, Tom, we've got the VR machine now. Well, they just stuffed up the car, it looks like. So we'll find out. And we'll see how they go. What do you think, though, in the comments down below? Utilities, for many, the most boring sector in the world. For me, it's been all right recently. It's been actually chugging up. So again, it's all about ratio on the trades. I think utilities could be rotating into at this stage. And it's really not just been about the sector. It's been the individual stocks that are doing quite well. So I thought we'd focus on that for a moment. Now I want to talk about the DAX. Now, I took the DAX off for a while because all I was going to say every day was it's in a bullish trend, it's in a bullish trend, it's in a bullish trend. And then something happened. A week ago, it hit the fib ratio. Now, it also managed to tag into that 17.8 level. Now, this is just before 18K, which is a big psych zone. This is a wild market, guys. This one has certainly been going up very, very bullish. And it's because they're making money outside of Germany. So if you ask me, or why are the DAX going up? The German market looks horrible. It's because it's making money outside. But this is a well-known take profit style target level. And we haven't seen necessarily a super amount of weakness yet. But if you are a dirty bear, and I mean a dirty bear because I don't know if I'd go against one of the strongest markets in the world, this is a big zone. Now, 87% of people are bearish on CFDs at the moment on this market. Now, they've been bearish for a long time, but 87 is usually a tip. So I would say that there could be like a spike during non-farms. Who knows? It is a very strange zone and certainly a level which I'm going to be keeping an eye out for. Personally, I'm not going to do anything with it. I just thought I'd bring it up because it's a big extension. And of course, if the US market starts to fail, the DAX might be copping the biggest amount of hits, even though it's been the strongest. HSI, the Chinese market in general, improving. Obviously, seeing some nice improvement across the tech stocks. If you put in things like JD had a very nice return on it, exceptionally good return, 16.18%, breaking through some downward trend lines. A lot to like about some of these Chinese stocks as they find bases because they are technically AI plays, the tech ones. Where'd they get the AI from? Who knows? If I was reading some articles today and having a look. But let's be real, opportunity is opportunity around markets. Let's have a look here at the Oz 200 and check it out. So it went to a big breach up, then it came back down. 2 hour there starting to show some signs of weakness, but until it gets underneath 7,697, it's still upward trend for the Aussie market. And that's thanks to possibly energy breakouts, metals improving, and obviously financials also improving. Now let's move over to the US 2K. So we're about to get a pretty big read here. We've seen weakness at the 2090 level, which is obviously the top of the supply, and we're still in a overall ascending channel at this point. So could we be going to the bottom of the channel and hitting 2000? Maybe. Could that be an opportunity for buyers? Yeah, I think it could be. So it doesn't look really strong, nor does it look super weak. NASDAQ's much weaker. It's selling off here in the current futures market. But generally speaking, if we get through this blue line here, we're going to go below the 20 moving average. It's the first sign of weakness. There are some other things that you can do. That was the worst trend line you could ever draw. Let me use an actual real trend line here. You can see there's so much correlation happening on this area. I'll probably post a chart over on our X so you can see how I've got it all set. But NASDAQ does seem to be possibly weakening. Obviously, the US 500 is the key level here. And make sure you got your gap levels on. So I put two here for you. 49.81 is the gap on the bottom. There's nothing sitting here volume-wise, nothing sitting here. So it could be a very quick sell through 50-50 if it does happen. And for people that went short at 51.29, number one, you've got guts. Number two, is that a level that is key? Absolutely, it was a gap fill. And look at it, just hit that, baby. It just went boom, straight down after. Now, 50-50, that's where the buyers sit. If you bought here and you sold here, then you could be a genius, and well done to you. We'll find out whether you're a really true genius, though, if it goes through 50-50, because the movement from here to here could be a big deal. Now, is this the biggest trade we've seen in a while? It's certainly the first sign of some weakness that we've seen in a while. And we just don't have, if you're a bull in markets, you should still remain it because relatively speaking, it's still in the upward trend. But obviously, if you're someone that believes in the March seasonals and stuff like that, it's a very interesting time for markets. No real follow through just yet, though. Just two key little day trading levels. Nice to see the indices, though, doing a bit better in terms of giving some nice up and down kind of flows. If you're interested in finding out more information about what we do over at FX Evolution, make sure to sign up for our free weekly newsletter. Follow us on the other socials. And of course, thank you so much for watching the videos. Really appreciate everyone's support of thumbing up the video, setting the alerts, watching it each day. I see your comments. I've been responding to a lot more of you recently. Thank you so much, guys. We'll see you in the next one. Remember, non-farm payrolls, 8:30 a.m. New York time, and that's on Friday. That's going to be the big one. And get ready for some gaps. Bye for now.